Facebook has raised its IPO to between $34 and $38, thus potentially putting its total valuation above $100 billion. The company cited that strong demand had pushed up the price. A valuation at this level, just to put it into context, would make it worth more than the US corporate giants Disney, Ford and Kraft Foods. Trading in the shares is expected to begin on Friday. To give us more detail on this front, we're joined by Simon Dingle, Chief Executive at Massive Gap. Simon, thanks very much for your time. Give us an update on what's happening with this Facebook IPO.
Thanks, Bronwyn. Well, I think we're expecting Facebook to rush out of the gates and expecting massive demand for the stock. I don't think we've seen anything like this for a long time, so it's quite exciting. Lots of big questions surrounding Facebook, obviously, and the value that's perceived in that space. But it's likely to be a mad rush.
Are you queuing up to get your stake at $38 a share?
I'm sorry, I only caught the second half of that question, if I can ask you to repeat it.
I was saying, are you queuing up, or would you be queuing up to get your stake in Facebook at around about $34 to $38 a share?
Absolutely. I mean, essentially for me, this is a case of supply and demand, right? They're queuing up 250 million shares, and I think it's easy to see demand for 1 billion of them. So I think on all fronts, except in the macro environment, perhaps it makes sense to load up on Facebook, definitely.
Could I just ask, sir, what kind of growth rate do you anticipate Facebook? Because with these kind of companies, it's all about growth rate. What kind of growth rate and for how long do you anticipate Facebook will have for it to justify today's share price or the listing share price?
I think that we can expect sort of massive growth in the short term. Just again, back to supply and demand, and there'll be massive demand for Facebook. So I think in the short term we can expect to see fireworks. In the medium term, I think there's some potential macro risks that could impact Facebook's prospects, but of course anybody's guessing as to what could happen there. As a company in isolation, I think that Facebook can maintain growth. I think that their prospects are fantastic. There's a very interesting debate to be had surrounding the potential bubble in this space, but I think that in the short term you can expect fireworks.
Just take us a step back. How is Facebook monetizing its offering? I just need to understand that. I seem to have got lost somewhere along the line.
Look, there are various ways that Facebook monetizes. I suppose the most obvious is in the form of advertising. They have a very, very valuable advertising platform in terms of the demographic information that they harbor, and where it becomes possible to target very granularly a specific demographic. It's easy to create an advert that can only be seen by people in a specific country, of a specific age group, and even working for a specific company and with particular religious views. And so when it comes to advertising, Facebook offers something that just about nobody else in the market has available. Then there's virtual goods and currencies. There are other platforms and applications that run on top of Facebook, and so there are some more abstract sort of revenue streams for Facebook, but advertising is certainly the core of it.
I'm going to bring you back to the point that you made just a minute ago, saying that there's much debate about whether we're seeing a bubble in this space or not, and it is reminiscent of that blue sky potential we saw just before the dot-com bubble burst of 2000. You don't have any concerns on this front?
The interesting thing with bubbles is that they all have one thing in common. Throughout history, everybody has insisted during a bubble that it wasn't a bubble. And of course, if that doesn't happen, then the bubble itself can't happen. And so bubbles rely on people insisting that they don't exist, which is quite interesting. But I mean, you look at recent acquisitions, for example, Ducati being sold for, I think it was what, $680 million, whereas Facebook bought Instagram for $1 billion. I mean, this is a website that makes photographs from your phone look like they were taken through a dirty window, and it's worth more than Ducati. And so while when you sort of offset that against the value of Facebook and go, well, they paid 1% of their value to basically own photography in the mobile space, then it kind of makes sense. But when you look at the dollar valuation of these companies, I think it's very difficult to insist that there isn't some form of bubble emerging here. And so I would tend to be conservative, but of course the big question is how long does it last and when does it, you know, pop? And I think that this could carry on for a while.
Kindly remind us, I think Facebook now has 700 million people that use it?
Thereabouts.
Yeah, what number do you think that will grow to, say, in 5 years' time?
I mean, if you look at the connected world at the moment, there are figures to suggest that at the moment there are 2.8 billion people connected to the internet worldwide, out of a population of 7 billion. And there are various, you know, sort of estimations of what that'll grow to in the next few years. And obviously, Facebook becoming one of the dominant brands on the internet, and what some people would describe as an operating system for your social life. The growth prospects for Facebook are massive, but I don't think that it's going to be ramping up substantially when it comes to sheer user numbers. I think that'll be more staid. And so I think if you look at Facebook's growth in the first quarter of this year, I think we can expect that to continue going forward, give or take.